promised to bankroll. Among them, the Philippine National Railways South Long Haul Project, the Davao-Samal Bridge, as well as bridges in Binondo Intramuros and Estrella Pantaleon. Also, the Mindanao River Flood Control Projects, Pasig Marikina River, and Mangahan Floodway Bridges, plus the Subic-Clark Railway Project. Now, Finance Secretary Sonny Dominguez also saying he invited China to participate in the pledging session in November to drum up support for the rehabilitation of war-torn Marawi. But now that China has its hands full with the ongoing trade war with the U.S., will it even have the energy or the focus to deal with allies like the Philippines? This morning, we talk about the precarious situation this economic giant is in and what that could mean for countries like the Philippines. Mr. George C., a businessman and director of think tank Integrated Development Studies Institute, joins us this morning from our Rockville studio. Good morning, George. Thank you for joining us.
Good morning. Thank you for inviting us.
Of course. So, George, yesterday I had a very interesting conversation with one of the guys from IDSI, and he actually pointed out how the U.S. imposed tariffs on industrial products from China, whereas China slapped tariffs on America's biggest export item to the mainland, which would be agricultural products like soybeans. What does that tell us about these two economies?
Right now, that actually tells us that they are very interrelated, and they cannot, there's an extent to which they cannot go beyond in this trade war. However, the volumes are very large, and the first $50 billion they're planning to impose tariffs on each other is now in effect starting this month. And China's talking about a few tens of billions more, but the U.S. is talking about potentially another $450 billion in tranches. So we might be in for a medium-term conflict on this matter.
Mm-hmm. George, they say when two giants are at odds and the status quo is forced to change, scholars say the little guys like us can actually level up. How do you think can the Philippines leverage on what's happening now?
Actually, the Philippines is not in a bad position. So some of these purchases they might have to do garments, shoes, wearables, and other items. They will start buying from, the U.S. will start buying from other countries. But given that some of our neighbors are much more prepared in terms of infrastructure and employment and taking care of this. For instance, the export of garments of Vietnam is $30 billion a year, whereas the Philippines now, it dropped down to below $1 billion, but now the wearables has come up back to $1.5 billion. So we will be able to take some advantage. We won't be able to take as much advantage of this situation as some of the countries whose economies are structured to take advantage of it better.
So, George, I just wanted to mention, because you did say you'd already cited some industries that we can take advantage of when it comes to the U.S. or China sourcing their products from other countries. Aside from the wearables, what other Philippine industries do you think stand to benefit the most in this trade war between the U.S. and China?
Well, trade war or not a trade war, because in terms of trade war, the Philippines is not a major manufacturer. The effect on us is indirect. So some of our electronics might be affected because we send it to China, who then sends it to the rest of the world. But the majority of our economy currently is consumption-based. And so how we should take advantage of this is we have to restructure ourselves to produce more services, because I don't think, and I think the Filipino is not prepared to go back into low-wage type of manufacturing. Mm-hmm. So we should be preparing for the technology economy. So while we are talking about the trade war, this is really far bigger conflict, because technology is one of the areas of battle, and finance is also an area of battle that's happening now between the two giants.
Mm-hmm. George, I know that 3 years ago, President Xi Jinping and his cabinet actually came up with an initiative dubbed Made in China 2025. And the goal was to increase, as you mentioned earlier, Chinese content of core materials to 70% by 2025 and focus on high-tech fields. This is exactly what you mentioned, like pharmaceuticals. What lesson can the Philippines learn from this?
I think the Philippines should learn. This model is very clearly something that the Philippines can learn from. They use their income from the low-wage industries. Now their wages in the coastal provinces from the Xiamen, Guangzhou, Shanghai, Beijing is 3 times that of the Philippines. It's no longer a low-wage country, and they're moving up the chain, and we should be doing the same thing. So currently, we have the build, sustaining our domestic economy, the OFWs, the BPOs, but they won't be here with us all the time. So we should be preparing. The economy is going to become a knowledge economy. We are going to be hit because we're using a lot of these services that might be subject to AI and other developments if we are not prepared for it. The new resource is really talent.
And shifting gears now, with China's plate pretty full with the trade war, what is the risk that its promises and commitments to the Philippines, like the infrastructure projects, could actually take a back seat, perhaps get some delays or setbacks?
The delays are not due to China because it has no effect in terms of the financial commitments. China has more than $3 trillion in reserves. So that also means that the trade war, if they want to, can be extended. The U.S., on the other hand, has a strong economy now, so they're both in a position to try to outlast each other in this battle. Hopefully they'll come to a political solution. In our case, then most of the delays are really due to our approval processes, the standards that we have not set yet. For instance, are we using the European rail standards, the Japanese rail standards, or the US? So, and the longest thing that takes us to arrive at a conclusion on these deals has always been a rights of way. So China has been able to finish substantially its projects in other countries in 3 years. In the Philippines, it's rare to start a major project in less than 10 years. So 5 years, if they can start in the Duterte admin, would also already be considered fairly fast. And so the donation areas, they're already ready to start. We have not turned over a lot of the details and approvals because there are a lot of opposition in terms of people living there or heritage areas or these types of internal issues we have to resolve ourselves.
George, you know, when we cover the field, most of the question that we get from critics would be, China's promised so many things, but where is the money? There's been a lot of talk, but not enough money to go around, not enough money to match them.
Yes, this is really not, this is a perspective that is somewhat not balanced because the money has been flowing in tremendously. They're investing a lot now in resorts, in hotels, in construction, restaurants, everything. These are just not the infrastructure projects. So, in fact, if you look at Ayala, a publicly listed company, this one company alone announced last year they had 15 billion pesos worth of sales to China people. This is just Ayala. This is not considering SM and other. So we're talking about very likely close to $1 billion already. Now, the infrastructure, again, we're pointing out that this is not due to lack of funding or lack of support. In fact, China has donated a lot of money that has not been announced. It has forgiven over $100 million in the North Rail loan. It has given over $100 million in terms of calamity and other assistances. The delays have been due to our internal approval processes. But the investments have been coming in tremendously through different areas, and people can feel it. In fact, our economy without this inflow would already be on a somewhat of a plateau or declining, but right now it's still going up.
But George, what do you say to people who express this element of distrust when it comes to funding from China, that this might be in exchange for something like perhaps our claims in the South China Sea, or who have questions because we've had experience with dubious Chinese companies before?
Well, we Filipinos have to look for it ourselves because they are not forcing it on us. And naturally, there probably is going to be some kind of expectation that we have some friendly relations. For instance, whether we get funding from Japan or the US, it is the same thing. Because in Japan, they told us we should not be emphasizing the comfort women. And so, but China has been proposing that we do certain kinds of joint venture, which we have done also with the US. So it's not an unusual situation. It's up to Filipinos. We study the transactions and the proposals if it makes sense for us. Because all over the world, this has been the way to resolve conflicts, and people have not realized, for instance, that China has resolved 17 out of 23 border conflicts already through bilateral negotiations, whereas some other countries, it's always ended up in war, and the countries are no better off.
George, shifting gears now, let's talk about the business community. I know that your family is among the country's biggest garments, textile businesses. You made clothes for the big global brands like Liz Claiborne, Tommy Hilfiger, Gap, and so on. But when I talk to some local businesses into manufacturing especially, the tone seems to be China is eating up our industries. Our local products just cannot compete with China's products. Very cheap production lines and facilities. So the local companies here, either they end up downsizing or moving their factories altogether to China. How do you make sense of this? What do you make of it?
Well, it's a globalized world, so the Philippines has benefited, our family has benefited from textiles and garments before, but now we've moved to other industries, to personal care, to technology, and so on. If China is no longer the low-cost producer, it's now taken over by Bangladesh, very much by Vietnam and other countries. So Philippines keeps getting bypassed. We have to tool our industries and our people to be able to make very fast adjustments, because China is also the biggest market. They buy the most luxury goods in the world, and right now, for instance, our other products, they come to us and say they want to pay more, and we need to upgrade the packaging and the products itself. So it's a huge market. We have to look at the opportunities and not keep looking at the past. Because we are no longer told to be competitive in that area. It is not China taking these areas now. It is Vietnam, Bangladesh, Pakistan, and to some extent the East European countries.
Okay, and on that
we also have the services like tourism. That's very much a tremendous field.
Okay, on that note, thank you very much, George, for joining us this morning and for your insights. Thank you.
Thank you.